Ladies and gentlemen, good day and welcome to the Sunteck Realty Limited earnings conference call for Q4 and FY25. We have with us today Mr. Kamal Khetan, the Chairman and Managing Director of the company, Mr. Prashant Chaubey, the Chief Financial Officer, and Mr. Abhishek Shukla, the Vice President of Strategy and Investor Relations. Please note that this call will be for 30 minutes, and for the duration of the conference call, all participants will be in listen-only mode. This conference call is being recorded, and the transcription of the same may be put up on the website of the company. After the management's discussion, there will be an opportunity for you to ask questions. There will be a question and answer session, and we request to restrict questions to 2 per participant. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may be based on historical information or facts and may be forward-looking statements, including those related to business standards, plans, and strategies of the company, its future financial condition, and growth prospects. These forward-looking statements are based on the expectations and projections and may involve a number of risks and uncertainty and other factors that could cause actual results, opportunity, and growth potential to differ materially from those suggested by such statements. I would like to turn the conference over to Mr. Khetan, the Chairman and Managing Director of the company. Thank you, and over to you, sir.
A very good afternoon to everyone, and thank you for joining us today. I would like to take you through the key developments for this period. To start on positive note, we have registered our highest ever pre-sales of rupees 870 crores for the fourth quarter of FY25, which led to the highest ever full year pre-sales of over rupees 2,500 crores for FY25, registering a robust growth of 32% over FY24. With this, we have grown faster in FY25 versus previous year, and we are confident of achieving similar growth in FY26 with higher margins. Sales contributions was from all projects, especially our uber luxury projects in Mumbai. These sales give us a better margins as well. The net GDV as of FY25 stands at about rupees 40,000 crore, which has grown nearly 3 times from FY22. We continue to focus on acquisition with higher EBITDA margins. We have spent more than rupees 180 crores towards new acquisitions in FY25. I am confident of announcing a few new acquisitions very soon. We have generated strong net operating cash flows surplus of rupees 374 crores in FY25. Our balance sheet remains strong with a net cash surplus of rupees 125 crores. Our net debt to equity has improved from minus 0.02x in third quarter of FY25 to minus 0.04x at end of fourth quarter of FY25. As we move ahead in FY26, we remain focused on value accretive project additions and more projects coming up for the revenue recognitions. We are confident of surpassing the margins of the previous years. I shall now hand over the call to Prashant Chaubey to take you through the financial performance of full year FY25.
Thank you, sir. Good afternoon, everyone. I trust you have had the opportunity to go through our latest results and the investor presentation, which are published on our company website and the stock exchanges. I would like to take this opportunity to share a brief update on financial and operational performance of quarter 4 and full year of FY25. The key details are: we sold rupees 2,531 crores worth of area in full year FY25, which is a 32% growth over FY24 pre-sales of rupees 1,915 crores. During quarter 4 FY25, pre-sales registered a growth of 28% booking value of rupees 870 crores as compared to rupees 678 crores in the same quarter last year. Collections for FY25 stood at rupees 1,255 crores as compared to rupees 1,236 crores in FY24, resulting in a net cash flow surplus of rupees 374 crores. The cash flow ROCE stood at 16%. Consolidated cash flow ROCE of past 3 years stands at a weighted average of 20%. On the profit and loss front, operating revenue grew by 51% year-on-year for the full year ended FY25 to rupees 853 crores in comparison to rupees 565 crores in the same period in last financial year. EBITDA stood at rupees 186 crores in FY25, 58% growth over FY24 EBITDA of rupees 117 crores. EBITDA margin stood at 22%. We reported net profit of rupees 150 crores, which is 112% growth over FY24, net profit of rupees 71 crores in FY24. For Q4 FY25, operating revenue grew by 27% to rupees 206 crores quarter-on-quarter, and EBITDA stood at rupees 69 crores. EBITDA margin for Q4 FY25 stood at 33%. On a quarterly basis, our EBITDA margin starting from Q1 of FY25 has shown steady improvement of 10% in Q1 FY25 to 22% in Q2 FY25, 30% in Q3 FY25, and ended the year with 33% in Q4 FY25. We reported a net profit of rupees 50 crores. Our net debt to equity stands at minus 0.04x with a net cash surplus of rupees 125 crores during FY25. Thank you. With this, we open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to please press star and 1 to ask a question. The first question is from the line of Rishabh Gang from Sunteck Family Office. Please go ahead.
Thank you for the opportunity, sir. I hope that I'm audible.
Yes, please.
Yeah. Yes, sir. Good set of numbers. I wanted to understand what is the pre-sales split between Nepean Sea and BKC, which is in our Uber luxury one. Yeah.
Yeah.
Hi Rishabh. So our sales for BKC was in Q4 our sales for BKC was 150 crores and our sales in Nepean Sea was 423 crores.
Okay. Also for the pre-sales at Nepean Sea, right? What kind of agreement are we doing? Because I think it is not yet RERA launched, right? So yeah, and has the old building of Bagesara demolition started? Yes.
So the first, your last question first. Old building of Bagesara demolition has started in full swing, and what we have assigned now more areas to our high-profile owners and tenants of this existing buildings under the permissible norm. Under that, we are doing this new sales. That is a part of pre-sales.
Okay. So the existing people who are living there.
Yeah. Who have the ownership rights and the tenancy rights.
Okay. Also, what is the status of our Dubai project?
So Dubai project, as we have always been mentioning, it is obviously under the approval and designing stage, and we will be looking to launch towards the later part of the FY26 or early FY27.
Just one more question from my end. Which are the projects, right, which are going to lead our pre-sales for the next 2 quarters, especially in premium luxury and the aspirational luxury part?
So we all know Uber luxury and premium. Uber luxury is doing better than the premium luxury, and the premium luxury is doing better than the aspirational luxury. So obviously, Uber luxury will definitely take more lead than a premium luxury, but nevertheless, there are a lot of launches which are coming, new launches for us in premium luxury as well. So I think both will drive maximum growth. Definitely much better than the aspirational luxury.
Sorry to interrupt, sir. I would request you to rejoin the queue for your follow-up question. Ladies and gentlemen, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Pritesh Sheth from Axis Capital. Please go ahead.
So thanks for the opportunity. Firstly, congratulations. I think good year for us, both in terms of pre-sales as well as P&L profitability. First question is on the next year's growth. What are the likely projects which are now going to contribute in terms of growth, and status in terms of launches for each of those, if you can provide, that would be pretty helpful. Thank you.
So Pritesh, for the launches, definitely we are looking forward for a formal launch of Sunteck Nepean Sea Road project, which is of a GDV value of current status more than 5,000 crore, and the Fifth Avenue at ODC Goregaon West, which is one tower of GDV value of more than 1,500 crores. Then Sunteck Sky Park, one more tower which we look to launch in this current financial year, which is again close to GDV value of 700 crores. Then Sunteck Beach Residences, Vasai, which again we will be launching SBR at again one or maybe 2 towers with a GDV value of close to both the towers put together 400 to 450 crores. And then new phase of Sunteck World, Naigaon, which is again close to 350 crores. So all these new launches, what we are planning to see in this current financial year, and with which we are confident that we will achieve our similar pre-sales growth what we have achieved in FY25.
Got it. That's pretty helpful. And even Dubai, right? Well, you didn't mention right now, but
so Dubai we are not considering, although in this pre-sales, but we are trying our best to see that we can launch in FY26 or else early FY27.
Okay. And what, if at all, if it's FY27, what would be causing that delay? And just a regulatory thing, or
maybe only the approval, nothing else. Obviously, approvals and the design. It's at the designing stage. We were contemplating the mix of the projects, so that's why we had to change the design once or twice. Right now, we are at a very advanced stage for a product mix, because it's a large project. It's almost close to 3-acre land parcel next to Dubai Mall in heart of Dubai downtown. So we want to be very cautious what we are launching. And so now it is at the final stage. So now approvals, and then obviously we have to look at launch.
Thank you. Ladies and gentlemen, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Gurpreet Singh from Arihant Capital. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, very much.
First of all, congratulations for the wonderful set of results. Sir, I have a couple of questions. First one is collections seems to be more or less in line with the last year. There is no major. So what kind of trajectory we are expecting on collections front? And secondly, how much revenue recognition we are expecting in the coming financial year now?
So collections, one thing is very clear that this time the more pre-sales, if you see, has come from the Uber luxury and the new projects, the new launches which are projects which are just going to start. So that's why the collection has been obviously those collections at the initial stage is low. But knowing that now like 4th Avenue, ODC, Sunteck City, in the coming quarter, we are expecting that to receive occupation certificate. So the collections which are going to, because of the projects which are under completion, will come in next 2-3 quarters. We are expecting the collections to be obviously more robust this year than the last financial year. Coming to the next question, I think I'll leave it to Prashant to answer your next question.
Gurpreet, hi. So, with regards to revenue recognition, definitely with the occupation certificate getting received for Sunteck City 4th Avenue, so that project will come up for revenue recognition in FY26.
And we are confident you'll see that similar growth of 30-35% in even our revenue and our margins as well as our bottom line.
Thank you. The next question is from the line of Abhinav Sinha from Jefferies India. Please go ahead.
Hi, sir. Congratulations on a strong quarter and year. On the sales trajectory, just wanted to check. So you are expecting growth to be approximately 30% next year, ex of Dubai?
So I've said similar growth in spite where people are giving lesser guidance, but we are confident that we'll have a similar growth this year, irrespective of Dubai.
Okay, so north of 20%, should that be a fair number?
Yeah, easily. Very confident.
Very nice. And which segment do you think will drive this? This is basically BKC, Nepean Sea, or whole mix?
So obviously this year also, if you see, our sales has been all across all segment, but we all have been seeing that Uber luxury is definitely doing much better than the premium luxury, and the premium luxury is doing much better than the aspirational luxury. So our major focus will be on premium luxury as well as Uber luxury to drive this growth.
Right. Sir, secondly, wanted to ask your observation on how pricing behavior has been across segment this year, and what are your expectations for the same next year?
So we are not contemplating any price rise in any segment, and we are hoping that even if the price remains stagnant, we are more focused on the velocity, and we'll try to see that we can do more velocity than the price rise, because our margins are already has improved a lot, and it will continue to see irrespective of the price rise. We are confident of our margins to remain intact or only going better from here.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next follow-up question is from the line of Rishabh Gang from Sajid Family Office. Please go ahead.
Yeah, sir. Thank you for the opportunity. Just one question. Any senior management hire that we have done, especially for the sales and marketing front, because we are going to have a lot of Uber luxury kind of inventory going forward?
So this is a regular process of hiring senior management in every department and everything. I think that process is already there, and we have enough staff for this new growth, and we are also hiring more people to see that we continue to maintain this momentum of our pre-sales growth, and we have no concerns about that. Any reason of asking this specific question?
No, just in the sense of capability building. But if you are confident, then
yeah, no worries. Anything else, Rishabh?
No, sir. Thank you.
Thank you, Rishabh. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Good afternoon, sir, and congratulations for a great set of numbers. So wanted to get your thoughts on our Bandra project and when do we see that getting launched?
Which is the second project you said, Bandra and?
No, about the Bandra project only.
Okay. So Bandra, we have already started this new, towards the end of this financial year, we have almost acquired that project, redevelopment. I think we are already in process of architecture designs are getting finalized and in the process of getting the approvals. I think once that approval comes, we are quite confident that we'll be I can give you on a conservative side towards the end of this financial year or towards the early next financial year, we will be able to launch that project. But that is with a not very big GDV value, so we are not even considering that in our whatever numbers we are contemplating for the next. Always, it comes in this financial year, it's always better and more the merrier. So that's how it is, Parvez.
Sure, sir. Thanks and all the best.
Thank you, Parvez. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Kamal Khetan for closing comments.
Thank you all for taking the time out of your busy schedule to join us today. In case if any of your queries have been left unanswered, please feel free to reach out to our investor relation team. We truly value your continued support and look forward to strengthening this relationship. Stay safe, everyone, and thank you once again.
Thank you. On behalf of Sunteck Realty Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.